I'm John Persinos, Editorial Director of Investing Daily, with a video presentation for Monday, January 24. To view our entire roster of trading services and publications, visit our website at investingdaily.com. Also visit the website of our subsidiary, streetauthority.com. I'm reminded lately of those Hammer films with Christopher Lee as Dracula. Technology stocks respond to rising interest rates the way vampires respond to sunshine. It's not a pretty sight. The tech-heavy NASDAQ is now in full correction mode, creating a downdraft for the broader market, and the main culprit has been rising bond yields. Inflation and the concomitant rise in rates represent the big story so far for 2022. The value of any asset is its future cash flows discounted at the existing interest rate. Growth stocks, notably high momentum tech shares, have higher expected future earnings. When interest rates are rising, those future earnings are worth less. Accordingly, investors have gotten into a bearish mood. See the following table. Last week was not kind to equity markets, with sharp declines across the board. All of the major equity indices posted losses for the week, with the worst carnage occurring amid the NASDAQ. It was the worst week for the NASDAQ since March 2020, and the index's worst month since October 2008. The NASDAQ is trading 14% down from its November 2021 record high. It didn't help that the latest operating results from bellwether tech stock Netflix were deeply disappointing. See the chart. When compared to subscriber additions in Q4 2020, the 8.28 million added worldwide in Q4 2021 represented a continued decline, news of which sent the company's shares in a free fall. It's not just the twin threats of inflation and Federal Reserve tightening. The economic reopening has unexpectedly come under threat by a pandemic that many of us thought was on the verge of getting vanquished. In the first half of January, an estimated 8.8 million U.S. workers were compelled to stay home because of a COVID infection or the responsibility of caring for an infected family member. Take a look at this chart. That number of 8.8 million represents an increase of more than 2 million people on a year-over-year basis. It's also the largest workforce shortage since the initial outbreak of the pandemic in early 2020. The good news is that the Omicron's symptoms are relatively mild, and the variant's spread appears to be peaking. The bad news is Omicron is still forcing an increasing number of people to stay home, causing disruptions in the economy and worsening supply chain woes. When the Delta wave started to wane in late 2021, many people assumed that the worst of the pandemic would soon end, but the emergence of Omicron was a curveball that no one expected. In recent weeks, case numbers have reached all-time highs, denting the economic recovery and financial markets. Small wonder that the American public's optimism is cratering, according to the latest data released on January 20 by polling firm Gallup. Take a look. When asked about the coronavirus situation in the country between January 3 and 14, only 20% of respondents said that conditions are getting a lot or a little better, down from a pandemic high of 89% in June 2021 and 51% in the wake of the Delta wave in October. Respondents who think conditions are getting worse came in at 58%, up from 18% in October and from a pandemic low of 3% before Delta's emergence in June. Consumer spending accounts for about 70% of U.S. gross domestic products, so much rides on the shoulders of the shopper. If Omicron does indeed peak and life returns to a semblance of normalcy, consumers may emerge from their funk. But if that doesn't happen soon, falling confidence can become a self-fulfilling prophecy and continue weighing on stocks. Regardless, the surest path to wealth is the same approach that worked best decades ago. Pinpoint profit catalysts before they happen. That's the time-proven approach of my colleague, Dr. Joe Duarte, Chief Investment Strategist of our premium trading service, Profit Catalyst Alert. In our forthcoming Profit Catalyst Symposium, Dr. Duarte will reveal his number one catalyst trade for 2022 and why it could hand you a profit of 2,022%. To claim your free VIP seat, visit the URL you see on your screen. Well, that's it for now. Thanks for watching. Stay invested and please stay safe out there. I'll see you again next week.